Welcome back to Bazaar Morning Call. It's festival time here at CNBC TV18 and in general, right? I mean, we're heading into Diwali, so we're not going to let Friday the 13th dampen our spirits today. In fact, our entire research team is joining us now in the best of their festive attire. Hi guys, good morning. Anuj, let me start with you as always. What are you looking at today?
Sonia, today is the kind of a day where you want to observe the first hour and see if the first hour low is being protected because the market's been such a strong buy on dips. And after that, perhaps you want to focus on strong stocks with some tailwinds. So that's the thesis that I have. Manappuram, General Finance, Gold Finance stocks have done well and with decent earnings. So it's corrected a bit at moving averages, important moving averages. So that could be one stock to look at. And really, one of the strongest stocks is Balkrishna Industries. Again, sectoral tailwind, strong earnings. The market needs to be stable after perhaps the first hour decline, and that's when you look at the mid caps. So that could be the other stock to track.
Okay, with that, let's get to the earnings. Nigel, Grasim, not just earnings, right?
Well, that's right. For Grasim, the numbers were a little bit better as well compared to what the street was working with. If you look at the EBITDA number compared to the standalone poll, well, that looked good. The VSF business, the EBITDA didn't decline as much as anticipated. But that's going to be a little bit of a sideshow because Grasim post-market, there was a bit of a buzz, and that's precisely what happened. They've gone ahead and they've sold more than 1 million ton plant, that's a urea plant, to Indorama. And the consideration that they've sold it for is 2,650 crore rupees. That's valued at around 10x the EBITDA, which is fairly positive, and it goes in line with what the street was working with. Remember, Grasim's net debt is at around 2,350 crores. So if they use all this money to wipe out their debt, then they'll be debt free as well. So this is the positive. The management says they have sold this. Now they're going to be focusing on the core business. The stock has run up, remember, and it ended at the high point of the day as well, but it'll open up in the green. Back to you.
Okay. Sonia, how will Aisha put her numbers?
Well, the numbers were weak, but they were largely in line with estimates. In fact, on the operational front, overall numbers were slightly better as well. So I think I'm going with green today because in any case, we've seen a massive recovery in the overall two-wheeler space too. But just to take you through the quarter gone by, Q2 revenues overall were down about 2.7% year on year. EBITDA was down 13%. It's come in at 471 crores, while the expectation was 437 crores. So, it's done slightly better than expectations. Operating profit margins at 22.1% versus a poll of 20%. So beat that as well. And if you look at the profits, they are down about 40%. Now, CLSA put out a note where they maintain a sell, but they have raised their target price to 2,000 from 1,880. They say that the Q2 improvement that we've seen, or at least better than expected performance, is in line with peers. However, there's a valuation premium, 75 to 90% over Hero and Bajaj, and that could make it a bit unsustainable.
Okay, that's on Eicher Motors. Nopur, what about Sun TV?
Well, Sun TV reports in-line set of Q2 numbers. Operating performance was better than estimates on the back of cost control measures, and as a result, we saw operating margins inching higher to 65%. Ad revenues continue to decline in Q2, down 29%, but in line with what Street was estimating. It was expected to see a decline of 29 to 30%. But subscription revenues drive the overall performance up almost 14% versus estimates of 12 to 13% growth. Management says ad revenues are back to 80% pre-COVID levels, but will see degrowth for full year. Brokerages are positive considering the pickup in ad revenues and low valuations. Nomura maintains buy rating and revises EPS estimates by 5% for FY21. CLSA also has a buy rating, says ad revenue and earnings growth to return in FY22, but do note that stock trades at low valuations at just 11 times 1 year forward.
Got that, Nupur, got that. That's all the cues that you need to know on Sun. Sonal, how about Mahanagar Gas?
Mahanagar Gas numbers were much better than estimates, Lata. So in terms of operational performance, it was record high margins reported by the company. Yes, it is a fall on a YOY basis, but the decline is much lower than anticipated. Margins came in at 43.5%, profits at 144 crores versus estimates of 103 crores. Even in terms of volumes, they were largely in line with estimates at 2.1 MMSCMD. Of course, it's a fall of 40%. The only thing that the street will be watching out for is they're in discussions with OMCs because they've asked for increase in their dealer commission by 9%. 90 to 100%, and that could in fact double their costs. But overall numbers were good. In terms of valuations also, it is cheapest in the city gas distribution space at 17 times. So expect the stock to be in the green today.
All right, thanks a lot, Sonal, for that. Looking bright and cheerful in her festive attire. Let's go across to Agam now. He's tracking Mazgaon Dock and IRB Infra today. Agam, morning.
Good morning. Well, I start with Mazgaon Dock Shipbuilders. So, well, it's been a good quarter, steady 16% growth in its top line. We've also seen substantial EBITDA margin expansion to as much as 6.6% against 2.4%. We have seen a drop in profits by as much as 4%, but that is largely on account of an exceptional outgo owing to the lockdown. And I also have IRB Infra. This has been a weak quarter. There's been a mild sequential recovery. Revenues declined 36%, but there's also been an improvement in operating margins. That's because of a sharp drop in site expenses and employee benefit costs. But the net loss currently standing at around 20 crores against a gain of 200 crores. Again, a mild sequential improvement on a quarter-on-quarter basis.
Okay, got that. Sonal, back to you. Fortis.
Well, Fortis numbers were better than Edelweiss estimates, Lata. Revenues declined by 18% to come in at around 1,000 crore rupees. EBITDA was down 35%, but it was the margin which was a big beat. So margins, they came in at 12.1% versus an estimate of 10%. Profits, however, went down by 88%, but still better than estimates. And because they're better than estimates, the stock could be in the green today.
Okay. Mangalam, you are tracking some more results?
Yes, I have a handful of results, and Anuj, the thing is that all these results are weak, but the stocks are likely to do better because, in the third quarter, things have looked much better. The results I'm talking about, we have specialty restaurants. Revenues jumped 2 times quarter on quarter, but they're still down 77% year on year, and as a result of which the company posted an EBITDA loss and a net loss, but restaurants have opened in the third quarter. The second one I'm tracking is IRCTC. While internet ticketing revenues have jumped 66% quarter on quarter, they're still down 50% year on year. While people are booking tickets, they're definitely not eating on the trains, which is reflective in their catering revenue, which is down 90% even quarter on quarter, and as a result of which the companies posted an EBITDA loss. But as things opened up, things are looking good for them as well. The third one I'm tracking is Phoenix Mills. The revenues declined by about 50%, EBITDA declined by about 57%. Out here as well, the management says that in October and November, 92% of their operations are open, and the next quarter looks much better than the previous quarter. So for that reason, all these stocks should be in the green today.
Okay, so even if the results aren't so great, the fact that tomorrow looks brighter. Mangalam, what about Jubilant? Although the numbers came, I guess details came in after market hours.
That's right, Lata. So the details came in after market hours. The headline was a bit of a miss. The headline was same-store sales growth declined 20% versus street expectations of 15 to 16% decline. However, the internals were rather positive, and which is why a lot of the brokerages have upgraded the stock today as well. The first positive is that the company closed 100 Domino's stores which weren't making profit for them, and the ones that were also dine-in focused. Second positive was that in October, they've revived nearly 95% of their sales, and most of that has come in through deliveries, which grew around 15%, and takeaways, which grew around 65%. Dine-in, which was expected to not do well, has fallen around 65%. Going forward too, the management believes that these things will improve. So strong focus on cost and focus on deliveries is something that the street likes, and which is why maybe the stock may be in the green today, despite a miss on the headline same-store sales growth.
Okay, thanks a lot for that. That's a detailed analysis. Let's go across to Reema now. She's tracking Wipro and TCS this morning. Reema, over to you.
Thanks, Sonia, for that. Let me start with TCS, where they've said they will be acquiring Pramerica Services Unit, which is a subsidiary of Prudential Financial, which of course we know is a financial company. The deal is expected to bring in incremental revenues of $300 million for TCS over the next 5 years. So it's positive because there is a minimum commitment to revenues and an upside to scale. For Wipro, the company has announced a restructuring of its operating organization. Not getting into the details, but what it will do is simplify the structure, yield economies of scale, and also drive a non-US focus for the company. Back to you.
Okay, thanks. So pink is the theme yet again. Thank you, lovely Reema. Back to Nupur. Nupur, some more stocks and news.
Well, I have 3 stocks and I'm expecting all to be in green today. NBCC won 2 orders worth 900 crores, so positive news there. Dr. Reddy's announces launch of a drug in US, although the market size is very small, just $75 million, but positive news there as well. Inox Leisure approved closure of QIP at an issue price of 255 per share, which is 5% discount to its current market price. So I'm going with green with all these stocks. Back to you.
Okay, well, all of you are speaking about more green, but I'll have to speak about a bit of red. My sense is that the inflation numbers will continue to cast a shadow on banking stocks. Maybe NBFCs will outperform banks because of that stimulus, both for buying a house where that income tax will not be levied if the price is, up to 20% less than circle rate, as well as because they can get more loans from, guaranteed loans from banks. That could be good for NBFCs, but nevertheless, I would think an overall red hue cannot be ignored. At least they will start back foot.
All right, let's thank our entire research team for prepping us for the day. In case you missed out on any of the stocks, here they are. This is a quick recap. We have the stocks with positive news flow today. There's Grasim, Eicher Motors, MGL, TCS, Wipro, Sun TV, Mazgaon Dock, Fortis Healthcare, Specialty Restaurants, IRCTC, Phoenix Mills, NBCC, Dr. Reddy's, Inox Leisure and Jubilant Food. While stocks with negative news flow today, there's IRB Infra, SBI, India Bulls, HDFC and Repco Home Finance. But let's now go across to the woman of the day, Manisha Gupta, our commodities editor. It is Dhanteras today, so I'm sure a lot of you are going to be buying gold. Manisha, good morning. What is gold what you're looking at today?
Sure am, yes. And you know what helps is that the gold prices have declined by 4% in this week. We have done an all-time highs of 56,190 in the month of August. So just about holding 50,000 right now. We've come off 6,000 rupees from all-time highs, and the buying really seems to be being supported because of that as well. Also, when you look at the quarter-on-quarter buying in India, this has been the worst year till time since 1995. The gold buying has been really weak. The second quarter of the calendar year saw 70% decline as compared to last year. The third quarter saw 30% of a decline. So on a quarter-on-quarter basis, we seem to be doing well. But as compared to last year, the numbers are still on the weaker side. But the final quarter of this year always is most important because you have festivals, you have wedding seasons, etc. coming in. And the jewelers tell us that volume-wise, there might be a decline. But value-wise, they expect the last year's numbers also to be taken up, because the gold prices have gained 40% from where it was during last Dhanteras. So that's the kind of gains people have made if you bought gold last year there. So while the precious metals are buzzing today in sense of buying, it is the industrial metals which are doing well too. You have copper still holding around 29-month highs. Aluminum is hit the highest since 2019. Stimulus expectations, strong Chinese consumption, improving industrial demand, all of those factors seem to be supporting.
Okay. Thanks a lot for that. Good for those who are buying gold then. The price has dipped a bit. We take a break on that note, and thereafter we're going to be joined by several managements who have just announced numbers. First among them would be Sanjeev Singhal, Director of Finance at Mazgaon Dock Shipbuilders.